5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to this episode of the Follow the Money podcast, episode number 490. We're entitling it Crypto Week on Capitol Hill. This week we got a pretty packed show lined up here. Crypto, of course, making waves in Washington this week. The markets are also on the move. We're going to be taking a look at those. And of course, as always, we're here to help you sort through the noise. So if you're new here, I want to welcome you. And if you've been with us for a while, I'm grateful to have you back. So in segment one, we're going to dive into what's being called Crypto Week on Capitol Hill. We're going to talk about why it matters, what it could mean for the future of digital assets. And then in segment two, I'm going to share my latest market commentary, observations on the S&P 500, the Nasdaq 100, the US dollar, Bitcoin, and a few other markets. And then we'll wrap up in segment three with some of my concluding thoughts. So with all that said, let's dive right in. Well, we've been talking about Bitcoin on this broadcast now for well over a decade. We brought Bitcoin to your attention, to our listeners here on the Follow the Money podcast back in 2013. Way back before the institutions wanted in, way back before Washington even knew what Bitcoin really was, or at least they weren't talking about it, that's for sure. And certainly no one in the mainstream media really was talking about this topic, but we were talking about it. In fact, we were even telling you back well over a decade ago that it would be wise to at least go buy a Bitcoin, to at least check out how it worked. We were actively buying back then, telling our members about Bitcoin. We later tipped them off to Ethereum back in 2017 when Ethereum was trading at about $12. We've seen it since go up to around 3,000. But back in those days, of course, people weren't really thinking about cryptocurrency. It really wasn't even catching Wall Street's attention. But as we fast forward now to where we are here in the middle of July 2025, we're in the middle of what Washington is calling or dubbing Crypto Week. So it's really been an unusually eventful week for crypto on Capitol Hill. 3 major bills are getting attention from lawmakers this week. And while we don't have any kind of votes to tell you about because they're in the middle of trying to get the bills to the floor, what we did get was some momentum, right? So this may turn out to be, in retrospect, a landmark week in the U.S. government's messy relationship with digital assets. So let's break down what's on the table here. We have 3 bills, as I had mentioned. First up is what is known as the Digital Asset Clarity Act. And this bill, as it kind of makes sense from its name, as this name suggests, this bill is really aiming to finally define how digital assets are to be regulated. Is it going to be the SEC? Is it going to be the CFTC, right? Or some combination? So the bill lays out a framework for when a token becomes sufficiently decentralized and how projects can actually raise funds legally. And it also protects self-custody rights. And that last part, of course, is very big to us here at Follow the Money. We want to see self-custody rights definitely enshrined in any kind of regulation that comes out of Washington. That means simply that you would be able to keep your digital assets, to yourself and self-custody them instead of being required to give them over to some third-party intermediary, which would obviously defeat the whole purpose of what Bitcoin was all about in the first place. So that first bill, the Clarity Act, one that I think that could have a very big and long-term impact, not only upon the future of digital assets in the country, but also around the world, because it'll certainly inform other nations as to how we're going about it. And many nations will oftentimes take their cue from how Washington handles different topics, but also it could really lead to a surge in the price of cryptocurrency, largely due to the fact that you'll have some real major certainty. That's really what continues to lack in this space, is having any kind of major regulatory certainty, which has really kept institutions out of the mix, which has really been a boon for retail investors who've been able to front run institutional investors in this burgeoning space. Okay, so there's the Clarity Act. We also this week have the Genius Act. Now, this is the one that's focused upon stable coins, which are those digital dollars that don't swing wildly in price like Bitcoin or Ethereum. They're just basically backed one-to-one with liquid reserves, typically the dollar. And so under this bill, stable coins would need to be backed one-to-one with the U.S. dollar. And it also makes clear who can issue these stable coins, with banks being invited to do so. There's also expectations that corporations like Walmart, Amazon, and others would be able to issue their own, stable coins. And ultimately, there's a couple of things to understand about this. First of all, you may recall the Senate has already passed this act, and so the House has to vote on it and approve it, and then send it on to the president for him to sign. But secondly, the hope, I believe, from the Genius Act, at least in lawmakers' minds who are conscious of the U.S. dollar, they're concerned about the future of the U.S. dollar. I mean, if you look at a chart of the dollar, you'll see that, since the beginning of the year, it's really been dropping, down 10% or so. I think it's off its lows a little bit over the last few days, but it's really gone down. And a lot of that has to do with the outrageous amount of spending that's going on right now this year. Also, the concerns about relationships and the trade war and all of this. It's just putting pressure upon the U.S. dollar. And when you think about it, stable coins, which are backed by U.S. dollars, would actually create fresh demand for U.S. dollars. And that's exactly what is really needed to prop up the dollar. And so that's an interesting development there. We expect the Genius Act likely will be voted in first, but we'll have to see. And it's a big change from where we've been in the past, and it could eventually really modernize the entire payment system. I am very bullish on the future of stable coins. I think it's going to be a boon for many corporations. I think it's going to be a boon for users who want to be able to transact more quickly. And then, of course, there is the third bill, which is known as the Anti-CBDC Surveillance State Act. Now, CBDC, that stands for Central Bank Digital Currency. This is one that is more defensive. It would basically ban the Federal Reserve from launching a central bank digital currency, which is really kind of a growing concern about financial surveillance and top-down control over personal spending. And I do want to say on the topic of the CBDCs that in many ways the United States already has a digital dollar. The fears over surveillance are kind of like, the horse has already left the gate kind of thing. The horse is already out of the barn, as they say. I mean, this is not something that we can really reel back in. I understand the concerns about a CBDC. I've been on record talking about how the Federal Reserve should be ended. I've written a book on the topic, Bankruptcy of Our Nation, where I go deep into the topic of the Federal Reserve and the insidious nature of basically handing our finances over to to private banking interests. It's not a good idea. It hasn't been a good idea. But at the same time, those who are trying to prevent a CBDC, again, I think it's just a little bit too late. These same folks could be targeting the NSA. They could be targeting the TSA. They could be focused upon all the overreach from other places. And it seems like you're just, you got 5 holes in the dike, and you just putting one finger into one. I mean, so you're not really stopping much by having an anti-CBD surveillance state act. More power to them. I don't necessarily think that it's going to stop the inevitable move that we're going to see regardless with digital assets. I could go into that more in detail, but I'll save my comments for that for another time. But so where do things stand right now? Well, you may recall I'm recording this on Wednesday afternoon. And yesterday, the House voted or tried to vote twice. They tried to get these bills onto the floor so they could actually do an actual vote on them. And there was initial GOP support for the full crypto package, all three bills, until about a dozen Republicans joined with Democrats to block it. And some of that came down to procedural stuff, how the bills were going to be bundled together, which is actually kind of important. There was also some lack of amendment options that they were concerned about. There's also concerns over the scope of the stablecoin rules. This is like the usual sausage making in D.C. boring stuff, but that's whenever Trump stepped in. He called in several lawmakers apparently for a private meeting. He urged them to prioritize the Genius Act, and that's something that's already been approved by the Senate. He took to social media to push that idea. That reignited momentum, and now markets are responding. Bitcoin then jumped, above the $120,000 mark early in the week, though it cooled off once the legislative delays hit. And then, of course, you have like crypto-related stocks like Coinbase and Circle. They've also had some very big intraday swings. The headlines were driving the price action. Now, where things go from here as we stand in the middle of the week, crypto week, it's hard to say. It's still uncertain. The Genius Act is likely to get a standalone vote soon, maybe today. The Clarity Act, which again is the one I'm probably most excited about, that market structure bill that's really going to make it clear as to how digital assets will be approached here in the United States and how they'll be regulated and who will be in charge, very likely the CFTC. That is going to face a tougher road in the Senate. And the CBDC ban bill is probably the most politically charged of the bunch. As I had mentioned to you earlier, there's a lot of fire on this topic, but not a lot of light, as they say, right? So there's quite a bit of concern about CBDCs, but again, not a lot of education on the topic, which really kind of makes it frustrating to have to watch it. But anyway, the big takeaway is this: Congress is no longer ignoring digital assets, right? That window of regulatory fog that we lived in for the past several years now is really starting to lift, and it's become a topic that's being bantered about in the halls of power in Washington. So we're here. There's still a road to hoe here, but nonetheless, we have certainly made it to a place where if we can get rules laid down and regulations laid down, then it's going to be a major victory for the digital asset space. And for investors, it could mean reduced legal risk, right? More institutional capital inflows, and certainly more adoption as Washington basically rubber stamps digital assets and tells us what they think about which one's a commodity and which one's not and who's going to regulate it and all of this. So that's huge. So we don't have digital assets basically hiding in the shadows anymore. They're really heading toward the mainstream. And so I encourage you, if you're invested in digital assets this week, it's a really important week to be watching what's happening in Washington. My hope is that we'll see at least the Clarity bill gain some momentum and certainly get that stablecoin legislation passed and sent to the president. But in the meantime, we're seeing cryptocurrency prices begin to surge as among expectations of the passage of these bills. And so in segment 2, right after this break, I want to come back and talk a bit about some of our latest market insights. I want to begin, though, by talking about the broader U.S. stock market, talk about where we see things right there. And then we'll also get into a bit to the price action in Bitcoin and Ethereum and a few other markets as well. So hold tight. We'll be right back with more market insights right after this.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, welcome back, friends. You're listening to the Follow the Money podcast. My name is Jerry Robinson, economist, author of the book Bankruptcy of Our Nation, investor, trading coach, just wanting to help you learn how to be a better financial steward of the finances that have been entrusted to you. Now, we did get some information between segment one and this segment. During the break, we got some breaking news out of Washington that the U.S. House has cleared a major procedural hurdle that sets the stage for the likely passage of these cryptocurrency bills. So basically, after that brief delay I was telling you about in segment one, apparently it got cleared up today. And so it appears now these conservative Republicans who had initially held out have now shifted their stance. And so we should have some movement on these bills this week. And that is, again, good news for those who are bullish on this space. We're already seeing prices rally today. Ethereum, or I should say Ether, which is the actual underlying token, is up 7.5% today, about $3,350. Bitcoin's sitting at about 119.5, which is still below its recent high of around 123. We also have Solana up pretty sharply today, 7.3%. It's about $174 as we speak. So we're seeing a pretty broad rally across the altcoin universe on this news that many are expecting to see these bills passed this week. Now, I want to get into some broader market insights and just talk briefly about several markets that we like to follow here at followthemoney.com. In fact, I just did a new webcast just for our members on Tuesday where I went through many different charts, gave a lot of insights, and our members can go check that out right now. It's on followthemoney.com/webcast. You'll find it right there. And you'll also find all of the archive webcasts we did right below that for all of our premium members. But now as we get into these market insights, I want to begin with the S&P 500, which is sitting near a record high. We just hit a record high intraday yesterday, but we've been sitting near a record high now for about a week on the S&P 500. And right now, as we look at the S&P, it's really holding up quite well, considering all the various things that are going on, all the bearish voices, all of the negative or pessimistic outlook even on the economy, and even the fears of the trade wars and the rising inflation. All of this still not putting a dent in the S&P 500 as it sits near an all-time high. And right now, only a mere 58% of stocks in the S&P 500 are trading above their 200-day moving average, which to me signals that we're in the middle of this rally, that we're not anywhere near the end of it. It's not that we go straight up from here. It's just that we think there's a lot more gas in the tank for this rally. So we expect we're going to see higher prices ahead for the stock market, not lower. The Nasdaq 100, which is a market that I specialize in, it's the one that I like to invest in long term and also trade around that longer term position with different types of ETFs. The Nasdaq 100 right now also sitting just below a fresh record high, an intraday high that was put in on Tuesday. We've backed off from those levels, but the Nasdaq 100 again supported very well by a rising 50-day moving average, a rising 200-day moving average as well. So the Nasdaq 100 looking really good. Gold now sitting in an interesting place. It's sitting below its previous high of around 3,500. It's certainly pulled back from that area, but it's still hanging tough around its flattening 50-day moving average. And it's sitting right around $3,300. Now, we had told you on this broadcast and even our own members in previous webcasts and other alerts that we've given and articles that we expected gold to, probably just take a breather for a bit. It was really overheated. It still is, quite frankly, from a longer term perspective. It's sitting in a place, not only an all-time high price-wise, but also technically speaking, it's in a very unique place that we haven't seen before. So if gold were to pull back even to the $3,000 level or so, that would not surprise me in the least. That would represent maybe a 10 to 15% pullback from the recent high. Again, that's not a radical expectation, but gold is still very well positioned and still sitting below that recent all-time high. When we look at the dollar is also interesting as well. The dollar, if you have been paying attention to what's been being said in the media, the dollar is down this year. Well, we were telling you at the beginning of this year, we expected that. We expected the dollar to do the same thing it did underneath the first Trump administration, which was to rally into the inauguration and then to really come down sharply in the wake of the inauguration. And that's exactly what we've seen, ironically. It's almost the same pattern playing out that we saw in the first Trump administration. So the dollar has come down very sharply. It's down about 9 or 10% year to date, which is a very big move for a currency, right? You would expect that maybe in a big stock market index, but in a currency, the world's currency for that matter, to be down that far in such a short amount of time is pretty radical. So the dollar now has been trying to rebound over the last several days, which has actually put some pressure on some things as well. We're actually seeing that potentially reverse now. We've got the dollar back up to the 99 level, the dollar index. That's the area we expected to run into resistance, and it looks like we're beginning to see that resistance develop. So what that means is that the short-term rebound we've seen in the dollar over the last week or so is probably not going to be here too much longer. We think we'll probably see the dollar begin to meander back down. Again, that'll put an upward pressure on stocks. It'll help crypto. It'll help oil prices and commodity prices in general. Also, the Russell 2000, this small cap stocks, have kind of been pretty tepid in terms of their breakout and their rally. They've certainly rallied off of their lows. They just haven't hit new highs like the S&P 500 and the Nasdaq 100 have already done. Small caps have been the laggard here. They're certainly trading above their 200-day moving average. I'm looking at IWM, which is the iShares Russell 2000 ETF. That's one that I like to track for the small cap universe. Another market that's doing really well right now, it's been doing well all year long and actually outpacing the S&P 500 and the broader U.S. stock market, is the Chinese stock market. We like to track things like FXI, which is the iShares Large Cap China ETF, or KWEB, which is the Crane Shares China Internet ETF, or even the S&P China ETF, GXC, which is probably one of the best. It's a really helpful metric for tracking nearly 1,200 of the most powerful and important and liquid publicly traded Chinese equities. It suffers from very low volume, so we don't really use it to trade, but we like to use it to track. And right now, China equities, really just outstanding right now. They're very well positioned, and they have a lot of upside potential. And the news we got yesterday about NVIDIA, which we're long NVIDIA, by the way, it's been one of our things we were talking about with our members back in 2022 when it was down in the doldrums. We were buying NVIDIA. It's done so well since that time. NVIDIA got great news yesterday from the White House, where the White House has green-lighted the sales of H20 chips to China. So that is a new development for NVIDIA that's going to add quite substantially, I would imagine, to their top and bottom line, which is good news for NVIDIA shareholders, and also just good news all around for NVIDIA, for China, for Washington as well, quite frankly, as NVIDIA is very well positioned to continue dominating in the semiconductor space. And silver is another one we should talk about. Silver backing off of its recent $39 breach. It got above $39 for the first time since 2011. It's backed off a bit from that price. We're currently trading at about $38 as we speak. But silver still has a bit of ways to go in terms of the technicals. It's not too terribly overbought on most metrics that we're looking at. And it's not even at its all-time high yet. Like gold, of course, is smashed well above its all-time high. Silver is still trading well below its 2011 high of around $50. So there's plenty of room for it to continue higher. So we'll continue to watch silver play out. Oil has been a big mess, just kind of up and down, not really finding much direction. West Texas Intermediate has been trading in that range between 55 and 75 for the most part this year. And Brent crude has been trading between, say 60 and about 80 throughout this year so far. So there's been quite a bit happening on that front. Now, of course, we also want to talk about the crypto space, and we'll begin with Bitcoin and take a look at Bitcoin. As I mentioned, it's sitting at about 119,000 as we speak. It's very well positioned above a rising 50-day and 200-day simple moving average. That is the place you want to be. You want to be rising above those. If you turn to a weekly chart of Bitcoin, you'll see the same thing, a 50 weekly and a 200 weekly moving average, both very supportive of the current rally. We expect Bitcoin is going to go on to rise above $200,000 this year. It's currently 119 or 120, somewhere in there. So that tells you there's quite a bit of room for it to run as we speak. Another ratio that we like to watch, a ratio chart, is the Bitcoin and S&P index ratio. That, by the way, is at a new all-time high this week. So we're seeing it hit a fresh record high in terms of how many Bitcoin it takes to buy, or how many S&Ps, I should say, it takes to buy one Bitcoin. That's around 19. So you need 19 S&P 500s to buy one Bitcoin. I mean, back at the beginning of 2023, that number was around 4. It took about 4 S&Ps to buy one Bitcoin. So we've really seen that number rally strong. As I mentioned, Ethereum has also done something important today specifically. It's breached the $3,300 level. That is an area we've been watching very closely. And it's getting quite a bit of strength in terms of volume. So this looks like a real move here for Ethereum as it breaks out. We are very bullish on Ethereum going forward. We've been bullish on Ethereum since 2017. We've been accumulating many different high-quality projects, as we've been telling our members. And so it's great to see these price breakouts today. So Ethereum looking very good. Cardano also staging a 200-day moving average breakout today on pretty strong volume. So that's also good news. It's also above its 200 weekly moving average. Chainlink also staging a fresh 200-day moving average breakout today as well. So we're seeing, again, across the board, a lot of these, what we would call altcoins, really looking good today, really staging a nice breakout. Now, if you like this kind of commentary, if you'd like to have more access to us talking about the markets, you've really got to check out our memberships. You can go to followthemoney.com/join. Like I was saying, you can get instant access to our hour-long video that I just put out yesterday, where I had a lot of comments on new cryptocurrencies that we're buying, new stocks that we're buying. You can get access to every time we dollar cost average into our long-term investments, we alert our members. If you want access to all of that, I really encourage you to check it out. Go join our investing club, followthemoney.com/join. On the other side of this break, we'll come back with some of our concluding thoughts and a final word. Hang tight. All right, friends, welcome back to the final moments of today's episode. It's been great to be here with you, friends. We've covered a lot on today's broadcast. Of course, it's a big week in Washington. As we mentioned on Capitol Hill, the crypto world is standing at the edge of a breakthrough here. In the markets, we're still navigating a mix of momentum and uncertainty and opportunity. But what's clear is this: whether we're talking about legislation or capital inflows or big macro trends, here's what we know regarding the digital asset space. is that clarity is coming, and with it, new ground is being laid for the next leg up. Now, if you've been with us for a while, you know that we do not chase headlines. Instead, we track the trends. We track what really matters. And right now, the pieces are moving very quickly. We see digital assets becoming part of the traditional financial system. And while the politics are noisy, the long-term trend, in my opinion, is remaining up, right? We have decentralization, we have financial sovereignty, we have a reordering going on right now of how value exchange is occurring, not just here in the United States, but around the world. And at followthemoney.com, we're watching it all closely. We're equipping our members with tools to help them make sense of it all and to act wisely and prudently and to actually profit from the trends that are going on around us. And if you're not already a part of our membership, if you're not an active part of our investing club, we'd love to have you. You'll get access to our Smart Score 11 system, which is extremely popular, our top 11 stocks, which we update regularly, access to our ETF leaderboard for those of you who like to trade or invest ETFs, our crypto leaderboard for those who like to focus on the digital asset space. You'll have access to what I'm buying in real time, new daily trading ideas every single day of the week, and just so much more. You just head over to followthemoney.com and check out our plans and pricing page. I encourage you to do it. I hope to see you on the other side there. And now, as always, I'd like to leave you with a final word. This time it's a simple but true statement by the great legendary investor Warren Buffett when he said, "In the business world, the rear view mirror is always clearer than the windshield." You know, that's such a fitting reminder, especially right now. It's easy to look back and see what worked or what we should have done, right? Hindsight is always 20/20. But the real challenge, and I think the opportunity also, is in looking forward and staying flexible and making decisions without the benefit of all of the hindsight, right? And I think that's what separates reaction from strategy. So there's just something to think about. Well, once again, friends, thanks a lot for being here. And until next time, I hope you stay focused, stay free, and keep following the money. Until next time, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.